Hi everyone, and welcome to this afternoon's webinar. As I always say, it's afternoon here in the UK, but I know we have visitors from all parts of the world, so it may not be afternoon where you are, but wherever you're calling in from, it's lovely to have you join us for this session. But as always, before we start, may I draw your attention to the disclaimer that I know you can see on your screen, because I can see it on David's screen. As you know, trading can be very risky, so please don't ever think of using money that you cannot afford to lose. For those of you who perhaps are coming along for the first time, we're going to be looking at some charts, obviously. We've got some futures charts. I've got the YM, but we're also going to be looking at some Forex charts. And I think David's got some commodities as well, because the methodology that we use to analyze the charts, volume price analysis, is something that you can apply to all markets and all time frames. And it really looks at the price action and volume and tries to and tells us whether what we're seeing happening on the chart is valid or not. Is it genuine? Is it an anomaly? Because all we want to know as traders is basically, what's going to happen next on the chart. What I've also done with volume price analysis, which is obviously the book is up on Amazon, there are companion books. This is the one for stocks, commodities and the indices, and there's also one for Forex as well. Basically what the companion book does, it's just full of examples. This one's got 200, and every chart is annotated, explained, so that you can see the kind of signals that you want to be looking out for on a chart. But more than that, what you also have to come to understand about price action and charts in general is you want to try and recognize the structure of the chart at the particular moment that you're looking at it and in the time frame. And by what I mean by that is it in a trend? Is it in a consolidation? Does it look like it's going to break out? Does it look like it's going to reverse? The clues are there, because once you pull up a chart and you know where you are in the price cycle, because price cycles, you have accumulation at the bottom, it will start to go into a trend, then it will go into a little bit of sideways, and perhaps it will carry on, or it will do maybe a correction or a pullback, and then maybe carry on, and then you have a major distribution, a major reversal, and the process is repeated on the way down. Once you know where you are on this cycle, it makes life an awful lot easier, and that's what volume price analysis will do for you. And this happens in all time frames. Now, of course, what you see in one time frame, you could be in a trend in one time frame, but when you look at a higher time frame, perhaps that trend is only part of a sideways movement, a consolidation, a congestion phase. But as long as you know that, then you have, A, will give you the confidence perhaps to take a trade, or more importantly, not take a trade, because although it looks like it's in a trend on a faster time frame, but because it's in a consolidation on a slower one, you might think, do you know what, this isn't going to go very far. I'm actually going to wait until I get more of a definitive move on a slower time frame, and I know when I take my trade on the faster time frame, it's going to deliver much more. Now, I've explained that in theory. The best way to see this in action is actually on the chart. But before we do, just a very quick look at what what's been happening in terms of the news. The news is all over and done with. The key number today was obviously the unemployment claims, which I believe it came in a little bit higher than anticipated. Obviously, this is the result of the pandemic. That's not really very good news, because more people are claiming for unemployment, and the numbers are horrendous. We have had these numbers before in the past, but it's not so much that, it's just the speed with which this has happened. And of course, yesterday was the FOMC, and as a result of the minutes, the market had a bit of a tantrum. In fact, I said to David, it reminded me, we have two grandsons. One is nearly 6 and one is just over 3. He's 3 and about 4 months old. And Luca at the moment, he has these wonderful tantrums. He wants something, he can't have it. He stamps his feet, he wails, generally causes a bit of chaos. And then you say very calmly, no, Luca, you can't have it, and then he says, he stops suddenly, shrugs his shoulders and carries on. Well, that's the kind of market reaction we had, because we had a little bit of a tantrum yesterday, and today it's markets decided, yeah, well, we know the Fed has got our backs at the moment. No, we didn't get the the definitive confirmation that the Fed would be managing what's called the yield curve, in as much that they will be buying, they're going to try and keep interest rates down as long as possible to give the economy a chance to recover. That wasn't the Fed didn't indulge them on that, and that's why we had a little bit of a tantrum yesterday. But just like Luca, the market shrugged its shoulders today and kind of said, yeah, okay. I mean, we'll look at the daily chart. I've got the YM. This is yesterday. There was a little bit of, it looks a little bit of weakness coming in on the YM, on all the indices, not so much on the NQ. This is today's candle. We had a fall overnight in Globex, but since the start of the physical open, it's gradually pushing higher. And what we also have to remember is when markets are moving higher, they creep higher. They climb what we call this wall of worry. And also, we are in August. I mean, at this time of the year, we don't expect huge moves. We have seen some decent moves, but generally speaking, everything quietens down. And everybody's waiting for September, and of course we've also got the US election to look forward to as well after that. But it's the summer, but things are very different at the moment because of the virus. So that's where we are on a sort of broad general basis, and I want to go back to what I mean by this understanding of the structure of a chart. And I've actually put some stuff up on my Forex trading Facebook page. So if you want to catch up on what I said about the pound Aussie and the pound New Zealand, because the pound's been a fantastic trade today. It's just been, there's been no stopping it in both sessions, both in the London session and certainly, the upwards trajectory hasn't paused, as it were. But the chart itself was this fantastic explanation. So this is the 10-minute chart. Now, the 10 minutes is a time frame I personally really like to use. It's very important that when you look at a chart and you look at VPA and you look at chart structure, you really do, as I said earlier, you need to look at it in more than one time frame. You certainly need a slower time frame, because on a slower time frame, you can see a move developing, as we see here on the 10-minute chart, and I'll talk through the move that we've had here since, just after the London Open at 8 o'clock. And then it gets to a point and perhaps it pauses. Now, it pauses for a number of reasons. It could pause because it's waiting for a news release. It pauses because there is, it's coming up to a session crossover. And you even get session crossovers. You get them in all 24-hour markets. The indices are now traded 24 hours. You're on Globex. So, as it comes up to the US physical open, you will tend to find the indices going into a congestion, pausing, and then the traders who come in in the North American session, they will come, they will analyze the charts, and they will pick up the sentiment that's been going on. And sometimes they will say no, well, they will take a reverse position, or they will carry on. And of course, it's the perfect time for manipulation, because you can do fantastic analysis, and it opens and it goes in exactly the opposite direction. So sometimes it pays to maybe wait and see what the bias is likely to be. So this is the pound New Zealand, and the other reason for having a slower time frame is because these pauses could be at significant levels. Now, David and I measure our significant levels, the hierarchy of our price levels based on what we call the Camarilla, and we have an indicator for that we have developed. They are 6 levels, and the reason we use the Camarilla is because the way we've developed it is because the levels on all the charts up to but not including the hour are refreshed every day, every 24 hours, but the 60-minute one and the daily ones carry on for the remainder of the week. So they are very important levels, and when we look at this chart and we look at the 60-minute chart, that will also explain why the pound New Zealand, but as I said, it could be any other instrument, is paused at that particular point. So very quickly, if we go back here, back to the London Open, this is 8 o'clock, and we have this is what I mean by you know, these session crossovers, and certainly the London Open is one of these periods where you do get an inrush of traders. It also happens with the indices, by the way. The London Open, it's not restricted to the forex market. As you can see here, this pair has been moving sideways. We know it's been moving sideways. We have what we call the volume point of control here. The volume point of control, if you like to use a market profile expression, is fair. It's like fair value. You know, the market is happy to transact at this particular level, and it shows no particular desire to move in one direction or another. Maybe it was waiting for the open, we don't know, but all we know, this is a consolidation. There's a fair amount of volume going under these little candles. Then we have the actual open itself, and the first thing that happens is there is a volatility candle triggered. We know that because this little triangle is triggered on the candle. What that means is this range of this candle is outside of its average true range. That alone is a warning sign that the volatility has come in. This has been triggered. The chances are it's a trap move. We know there's always trap moves at London anyway. And what tends to happen is the price action will reverse into the spread of the candle and then congest and then reverse, maybe going up, maybe going down. What is also important on this particular chart is you have a very, very strong resistance here, which is this red hatched line. With this particular indicator for NinjaTrader, the wider the line, the hatch line, the stronger the resistance. So it's going to. So we know not only is this in congestion, it's actually trading between a strong resistance at the top, and you've got the VPOC, and if you can see behind that, you've got a blue line. So it's obviously got a very strong support. So basically, it's going nowhere until the London Open, and then we do have the break. We have volume supporting. The most important 3 candles in this break is actually once it gets, first it's got to clear the volatility candle, which it does. As I said, what I'm talking about here applies to all charts and all markets, not just, I'm just happened to pick a forex chart. It's cleared the top of the volatility candle. It clears the top of this strong resistance. And then the volume begins to pick up. And we can see here, we've got rising volume, we've got rising prices, and that is exactly what we want to see. Then we get a little bit of a pause and a pullback. So we look at this and we suddenly see, it's going into a little bit of sideways. The trend monitor is still blue. The trend dots are still blue and just go into neutral. And what we want to see when you get one of these congestion phases where basically it's coming to a pause point, you get very narrow spread candles, and what you have to try and determine is, well, is this going to roll over, or is this possibly, you know, just as I said, it's just pausing and waiting to go higher. Look at perhaps consider the anomalies on, if this were going to be a reversal, on the down candles. So we have a little down candle here, but the volume isn't very high. So we think, well, you know, if that was going to carry, you know, if that was going to be and that is a 2-bar reversal as well, don't forget, that isn't an awful lot of volume for that little candle there. You've had that candle as well, which is a weak candle with a reasonable, reasonable amount of volume. That hasn't pushed the price lower. So you think, okay, that is simply it. I haven't got this on the same, I haven't got it on the same chart, but if I look over to my 10-minute chart, not the 60-minute chart here, this, as I said, these are my daily levels, as it were. Where am I here? This is where this is a piece of price action that I was looking at, where we came to a pause point. This is the break higher that we saw here, the 3 candles going up on nice volume. The candles are then narrowing, and it's quite a lot of volume, but they're narrowing. So that of itself tells us that we are moving into a potential consolidation, congestion, because that amount of volume going in, very narrow spread candle, you would expect the candle to keep going up and up and up, and it's not. They're narrowing. So that, again, that is another signal to tell you that possibly this move higher that we have here is coming to, the first thing you've got to say, is coming to a pause, but is it coming to a reversal? So then we have this congestion phase, and as I said, the down candle doesn't seem to be, exhibiting the characteristics that you want for it to be a reversal. But more interestingly, it is consolidating at a very key level. As I said, we use the Camarilla, you might use a moving average, you could even use the Fibonacci level. One of the key ones, you think, well, what is the price doing? So rather than just say on a fib level, right, it's reached this fib, it's gone up so far, I'm just going to put a sell in because it can't go up any higher. Well, that's not really the way to use levels, to use important levels, however you decide to mark, recognize these levels. This is the R4. This is a level that basically what tends to happen, you do get a congestion. It can sometimes reverse, but if it does then break and go higher, that is the first of our a confirmed breakaway. And in fact, it does actually carry on. And then what it does again, it does exactly the same thing when it gets to the R5. So if we look at the R5 here, we have that congestion, then we have this little move higher, then we get back into the congestion phase again. What happens? You have candles moving higher, volume coming in, as we can see here, 1, 2, 3. Volume is kind of falling away a little bit. We have a little bit of a squished candle here with a reasonable amount of volume. In an uptrend, what you want to see is you want to see what the volume is under the down candles and the reverse in a downtrend, because that kind of tells you whether, is this actually going to reverse, or is it really an anomaly and there's actually buying in there, and that's going to support the price. Then we have the next one. Volume is good. Then we have this one, which is a little bit bigger than this one, but look, the volume is falling again, and we have the same repeat of this down here. Looks like it's going to be a 2-bar reversal, but it doesn't, and we have and we start into the congestion, but we know we're going to start into the congestion because it corresponds with the R5, another key level, and so it moves sideways. Look at the down. As I said, we're in an uptrend at the moment. This is a primary trend. This is what we call the primary trend because we've had a clean break from this from the volume point of control. So this is our primary trend. This is a down candle. Ton of volume underneath that. Well, if that was going to go lower, that should be down here somewhere at the very least. It's also at this significant level. This isn't going, and even though that's is a weak candle with a very with a wick to the top, a ton of volume underneath it, the down candle doesn't support the view that this is going to roll over. This is simply consolidating that the pressure is to the upside rather to the downside. And then we have the second up candle coming up here, and on it goes. We have a little bit more of a congestion, and we have the same repeat. We have another down candle, a ton of volume. What happens? It carries on. You think, well, because that's anomalous, that amount of volume you would is not in sync with the candle that we see here. And when traders see a move like this and they think, oh my goodness, you know, what do I, you know, the first thing that comes into their head is this: no, it can't go any higher. It's got to reverse. It's got to reverse. Because I don't know, we feel uncomfortable with price just marching on higher, sort of relentlessly. But if you look, if you know what to look for, and you know these pause points. So if you've missed all this, okay, and you think, well, okay, because you weren't around at the London Open, you missed that. You've missed this one, and then you've had this consolidation. Well, each time price consolidates, it'll either go in one direction or the other. It may reverse or it may carry on higher. That is not chasing price. That is understanding the structure of the chart and recognizing that there is still more upside in this move. And if you think about it logically, what have the indices been doing? You know, are you really going to sit on the sidelines and say, no, I'm not going to follow the indices up because, you know, they have got to reverse? Well, you know, one day they will reverse, but you as a trader, as long as you can, you know, break down the structure of what you see and compare it with what is happening on a slower time frame, a higher time frame, you can then have the confidence to say, yep, this is going to go higher. Now the question is, well, where is it going? Because on the 10-minute chart, we've actually chewed through every single level. As I said, we have 6 levels. We've gone through the 4th, we've gone through the 5th, we've actually broken through the 6th. We had a little bit of a congestion here on the 6th. So we have to go to the slower time frame. So we go up to the 60 and we see here, right, okay, it did get through the 4th. Didn't really, there was no congestion here. There was a little bit of weakness, didn't really retest it. So where's this going to? Well, it's going to try and get to the R5, which is up here, which is at 2.0284. And you can then sort of be confident and think, great, you know, I've done this analysis. I mean, this has been a fantastic move higher since this morning. It's just been extraordinary, but they do happen. And as long as you understand what is happening on the faster time frames, put that into the context of what is happening on the slower time frames, then you can, you know, join these trends at the right point. That's the key. That is the key takeaway from here. Now we're obviously coming up to, you know, the session's going to, you know, everything's going to quieten down as we go into Asia and what have you. And for those of what we've also done to make things even easier for traders on the Forex side, we've actually developed some very, very particular indicators that allow us to track the, if you like, the move in the pairs by disassembling, by looking at the individual currencies. And this is the pound, which is this yellow line, and it looks like it's still got some potential to the upside. This is the New Zealand. It's obviously, it's been you know, very oversold, and now it's kind of turning up a bit. The pound Aussie was the other one that I was looking at, because that was a great divergence trade that we saw here when the pound moved up and the Aussie moved down. Is there more buying left in the pound? Well, yes, probably against the dollar, because this is the move from the dollar yesterday. As I said, in response to the FOMC, it shot up, it's been going sideways, and now it's rolled over. So it looks like, yes, so, you know, there's still buying in the pound, possibly against cable. And I think David has got cable on the other side. So these are our specialist indicators for the Forex market. Now, what I've actually also looked at is the YM, because the YM is, again, we had exactly the same kind of very similar scenario. You have to remember, when markets are, you know, at tops, they've, you know, they had a good strong run. This is the YM, certainly not as spectacular as the NQ, but I personally like the YM. It's a little bit more measured of the 3 indices, the S&P, the ES. That's, you know, there's a lot of algos in there. You've really got to be quick. You really want to scalp it. It's not the you know, it can be very tiring to trade the ES. It doesn't move. The number of ticks you you have to take them very quickly. But the Nasdaq's had some fantastic moves, but of the three of them, it's just my personal opinion, the YM, it's a bit more, what I call a bit more stately. So this is today's candles. We can see here we had the fall, as I said, in reaction to the tantrum. It's still in an uptrend. Yes, it's kind of, we've got a little a curling over here at the moment, and you know the 28 is clearly 28,000 is the one to aim for. But since the fall, we've got the wick to the bottom of the candle, and there's clearly, you know, markets want to go up, but they don't rush up, they will creep up. Let's move over to the 10-minute chart and see, because that's been quite interesting. That's something I've been following this afternoon. This is what I said earlier about you might as well, the crossover, the open, it's crossing over from Globex, and now you've got this inrush into the physical open in the US, and you have exactly the same trickery, if you like, that we have in the forex market. It's broadly, if you look back across, let's just close this down a minute. If you look back across this 10-minute chart, you can see it's the best word you can describe. Well, it's a bit messy, you know. It goes up. It's been rotating around. Once again, the volume point of control. There's really no strong decision one way or another. So everyone's sort of waiting for the, well, they were waiting for the unemployment claims, and they were waiting for the market to open. So what happens is you have this volatility count. The volume bars here are reflective of the inrush, the surge, if you like, that always happens at the open. What happens to these? It will automatically compress them. But if you ignore that, and you know, you can use VPA using these volume bars, or you would be looking at them, you think, well, how would you possibly do that? You just have to remember there's such a surge at the open that these are then squashed down, as it were. What immediately happens is you have the VPOC, it goes, bangs down, back up, bang down again, you know, volatility, horrible price action, retrace into the spread of the candle. But we have the levels here. We know from the sideways price action where the key levels are, and they were also on the Camarilla. And you just have to be patient. You have to be patient until there's some sort of pull away from the volume point of control. You have to have a break above the high of the volatility candle. The volatility candle, the high and the low of itself, also gives you yet another level, if you like, price level. You've also got a support platform here at 27. I'll just move this out of the way. Hold on, let me move this out of the way. Sorry, you can't see it, but I can, and it's masking my thing. Right, 27,480. You have the resistance here at 27,540. Let's take those. And we did actually manage to pull away. Then we came back into it. This candle didn't trigger the volatility, but it's almost as close to that as possible. That wasn't quite outside the average true range. A little bit of more sideways, and then, you know, we are creeping higher once again. But what I've done with the YM is I've actually put it on to a Camarilla, onto a Renko chart, because when you are in this kind of very choppy price action and you have a lot of wicks to the candles, and you know, it's basically really, you know, very messy looking chart, what we've developed is what we call a Renko Optimizer, and what it does, it will calculate for you the optimum brick size for you to use. And what the Renko does, it helps to smooth out that price action. What it also does, it picks up the chart structure. This is what I'm saying to you before, where you have a little bit of a trend, then you have a little bit of a congestion, then a move higher, then a little bit of a pullback. And I've also been able to put the Camarilla levels up. When I was looking earlier at the 10-minute chart, as I said to David, I said, this is going to stop here. This is going to stop at 27,660. And in fact, it actually did, because this is one of my key levels. And, you know, is it going to reverse? It will reverse. I will know it will reverse. First, the trend dots will change, because the trend dot is the indicator that is closest to the price action. I also have to wait for the trend monitor to turn. Well, it will either go into this in-between color, and then it will go into a bright red, and the levels then tell me where is it likely to go. I've actually got quite a few of the support resistance levels in there, of accumulation and distribution levels. But what I can do, think about this indicator, is you can actually, right, you can, what we call the cluster factor. If you set it to 0, it will pick up a lot of levels. But if you take it to 80, right, it reduces all those, you know, those the smaller, the less significant levels, and put on the more important ones, the ones that are stronger, and it cleans up the chart a little bit. So this is bounced off the R1, which is exactly what I anticipated. Where's it going to likely pause? Well, 27,630 sounds a good, you know, sounds a good place for it to pause, but it could actually have another run at the R1. If this is going to go higher, where's it going to go? Well, it's going to go to 27,690. What I also need to keep in mind with this is to have the 60-minute version of the levels, because, as I said, often price looks like it's going, you know, where I anticipate that it's going to move to, and then suddenly it comes to quite a dramatic pause, and I'm thinking, well, why did that happen? I just want to check I've got enough days loaded up. Yep, here we are. And where are we? 27, I've got the S1 here, 2770. Let's have a look, which I think is okay over here. 27, yeah, 2770 is here. It's actually between the R2 and R3. So I don't really have anything significant before the R2. So that's what I will be looking at for the YM. Now, if it doesn't get through this level here at 27,660, where's it going to go down? Well, it's got this support platform here. Then I've got another one here, and then I've gone right back to the S1, which is where we had a little bit of congestion. But the original, the break, if you like, was here. Following this congestion, we had the move lower, then we had the congestion, and then we had the break, and we had this really off this nice support platform here. And by using these levels as well, they also help you to set your stops. You don't have to use a fixed stop. You don't have to work out, well, you know, what is my, we talked about risk reward in terms of, you know, that's a fixed ratio, if you like. What these levels do is they allow you to, they will give you a good place to place your stop based on the chart structure. So you can use these levels for placing stops, and then the levels to the upside are your objectives. So, you know, you don't have to restrict yourselves to 10 points, 15 points, 3 points, 4 points. It really is what the market is going to deliver for you. So that's what I was going to say about that. The last thing I just want to, I won't talk about the low volume and high volume nodes. Can I leave that to you, David, when you do chart structure? Because there is another part of chart structure which is also important based off the VPOC, and that is where we have what we call low volume nodes and high volume. A high volume node will always develop around, as I said, these congestion phases, and if it then hits a low volume node, when it breaks away, it's going to go through fairly quickly, and then blow me down, it hit another high volume node there. But that coincided with that Camarilla level. Right, if you've got any questions on anything I've said, just drop me a question in the chat box. I'll pass you over to David and see what he's been looking at. I'm going to keep an eye on my YM. Where are we here? There we are. This is really from the open here, following the volatility. It still wants to creep higher. I know where this price, what this price wants to do. Oh, by the way, talking about volume also, in the move higher. This is actually sort of dying, you know, it's not fantastic, let's be honest. But the other thing you have to bear in mind is that, you know, it can move higher on low volume. You don't have to, you know, this has been very, very dramatic. So you have to also put it into context of the seasonality. You know, summer months have don't normally have huge amounts of participation. So is it likely to want to go up? Yes. And as I said, as we are in an uptrend, you know, keep an eye on the down candles. And, you know, if there's not massive volume under down candles, then the chances are it's going to drift higher, it's going to creep higher. As I said, it's you know, going long in anything, you have to be a little bit patient. It's why David always goes short on everything, because he hasn't got any patience, and markets always fall a lot faster than they move higher.